Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. It's the 25th of July 2023 and here are the top stories for the day. Is Jio Financial another Reliance disruptor? Do India's government surveys need a revamp? Time to sell after the sharp run since March? And what is IMAX? India's most valued company, Reliance Industries, has a big consumer base, a deep pocket, and cutting-edge technology at its disposal. So in October last year, when it announced its plans to demerge and list its financial services business as a separate entity, not many were surprised. And last week, we finally saw the birth of Jio Financial Services. But should the existing players in the sector worry? Tariq Ahmad finds out.
As part of a move to unlock value, Reliance Industries demerged its financial lending arm last week, giving birth to a new entity called Jio Financial Services. And after a special trading session called for price discovery on July 19, the market assigned a price of 261.85 rupees. It was way above the analyst's estimate, who had valued it at 160 to 190 rupees per share. Jio Financial Services got valued at 1.66 trillion rupees following the hour-long special trading session. It marked the biggest demerger in India's corporate history in terms of value. The demerged unit will be listed on exchanges in a few months from now. Reliance Industries has transferred 15,500 crore rupees of cash and liquid investments to Jio Financial Services following the demerger. Now JFS has a liquid asset base of 20,700 crore rupees. Among non-banking financial companies, Jio Financial Services is the third most valued company after Bajaj Finance Limited and Bajaj Finserv Limited, and currently only 5 banks have a higher market capitalization than the Jio Financial Services. The Jio Finance Services has a 6.1% holding of Reliance Treasury shares. Also, the AAA rating of the parenting company will positively affect the borrowing ability of the Jio Finance Services. Currently, the biggest non-banking financial firm in India, Bajaj Finance, has a 2,47,379 crore rupees worth asset under management with a net worth of 54,371 crore rupees. So can the Jio Finance Services disrupt the non-banking financial space?
Overall opportunity for lending by the corporate banks and the NBFC has actually just begun. I think, in my viewpoint, I think as the consumerization in the economy increases, as more and more individuals starts buying the goods and the services, which currently only few of them have been participating largely in the India's, I would say, the premiumization of retail segment. In my viewpoint, I think this is only a beginning, and that is where probably I would like to believe that overall opportunity will grow and grow much bigger.
And what are the factors that are in favor of Jio Financial Services?
The company will have a competitive advantage as it touches various aspects of financial services for both businesses and individuals. The large Jio subscriber base, as well as customer data across retail, gives immediate access to a customer base at negligible acquisition cost. At the same time, the large Kirana network is a large upside for Jio Financial to cross sell products with the power of data to underwrite loans. Scaling to the size of incumbents in the space is made easy with access to capital of over 1 lakh crores, which could take the book to anywhere between 5 to 10 lakh crores in a short span of time.
Geo Financial Services starts with a very good proposition. On one side, they have got the customers coming from Reliance Retail or Geo platforms or Money Control. And on the other side, I think they have a strong balance sheet of 1,40,000 crore net worth, which is giving them the power to lend money of close to 7 lakh, 8 lakh crores in from the balance sheet. So as a result of which, I think on one side money is available, second side customers are available, and in order to complete the transaction, fulfill the transaction, they have got the Geo platform technology available, fintech technology available, which is allowing them to basically complete the transaction both on the payment side as well as on the e-commerce side. So, in my viewpoint, I think this is a possible business model and this is a potential that this company is having. They may end up addressing the total market of around 10 lakh crore AUM in next 3 to 5 years' time. That is a good possibility. So, let's see how exactly they unfold the business and execute it.
Jio Financial Services is emerging at a time when Adani Group is exiting the NBFC space. It has agreed to sell all its stakes to Bain Capital, so Reliance has one less player to compete with. Being part of India's biggest conglomerate will indeed give Jio Financial Services an edge. The 6% treasury holding in Reliance Industries Limited and the data points from the Jio Telecom are huge advantages for the demerged entity. Reliance's 18,000 plus retail stores with the digital capacity will also give Jio Finance Services a huge leverage in the non-banking finance space.
Given Reliance's past, it may well pull up a surprise in the lending business too. Meanwhile, in another surprise of sorts, Shamika Ravi, a member of the Economic Advisory Council to the Prime Minister, recently questioned the quality of economic data collected in the country. Her statement has triggered a debate around what Ravi called archaic sampling methods. So, what are the arguments in the debate? And do India's surveys really need a revamp? Abhijit Kumar and Debar Gusanyal bring you the story behind the numbers.
In a recent column for English Daily, a member of the Economic Advisory Council to the PM, Shamika Ravi, indicated some major gaps in the quality of data in Indian surveys, pointing out the data quality of the National Sample Survey, National Family Health Survey, and the Periodic Labour Force Survey. She said the sampling methodology is outdated and needs an overhaul to reflect India's true economic status. Referring to the estimated rural population of India and the response rate of the sampled subjects, Ravi said the current sampling methods are not adaptive to the rapidly changing rural-urban dynamics. Soon after her observation, former Chief Statistician Pranab Sen responded, arguing that discrepancy in the estimation of the rural and urban population is an outcome of differences in the definitions of urban areas in the census and the surveys. The response rate of the sample is another area of concern in the sampling process, says Ravi. The rate of response to the survey increases with households with higher incomes, while lower income households usually avoid responding to such surveys. Not considering these discrepancies often lead to misleading estimates. Citing the example of survey methods from the US, Sen responded that such errors cannot be corrected and can only be replaced with more responsive people. Ravi is not the only critique of India's statistical system. All three members of the Economic Advisory Council to the PM, including her, Chairman Vivek Debroy and Sanjeev Sanyal, have voiced their concerns. Debroy has called for a systemic overhaul, adding that there is little expertise in the survey design. Earlier, independent journalist Pramit Bhattacharya, who published a paper titled India's Statistical System, Past, Present and Future, had also pointed out essential issues such as the perceived lack of independence of the NSO and instances of the government wanting to control the data narrative, among others. The observation has prompted the government into action. The Standing Committee on Economic Statistics, or the SCES, constituted in December 2019, has been turned into the Standing Committee on Statistics. It will be chaired by Pranab Sen, who also headed the earlier SCES. The committee has been tasked to review the existing framework and results of all surveys brought before it by the Ministry of Statistics and program implementation and address the issues raised so far. But is the committee a final solution?
The question is, what is the change that is required? Is there a change that is required in the methodology or the kind of questions that are asked or the way it is disseminated, or the kind of access that is available to the researchers. So I think these are all issues which will vary depending on who is asking the question, depending on what kind of problem that is there. We have to come to an agreement to those issues. Then only we can go ahead about talking about what kind of a change is required.
Then, is a complete systemic overhaul the need of the hour?
India's survey methods need updating rather than a total revamp. We had a good system in place, a system that was, time tested, well experimented with, and so on. The problem was that over time, we have let the whole system deteriorate. More importantly, there has been great advances in the international thinking on how to conduct survey. They have become more technology enabled. So the structure that we had is a sound structure. I'd see it as sort of an incremental upgradation rather than a drastic revamp.
And what should be the right approach for course correcting India's survey systems?
Statistics is too important to be left just to statisticians. What we need is an interdisciplinary approach to developing questions. Who are our appropriate respondents? How to ask the questions? How do we do quality monitoring given the new technologies that are evolving? So I'd like to suggest that what we need is actually some sort of an institute which is devoted to research methodology and brings in interdisciplinary approaches that government needs to set up. The other thing that we need to do is we need to substantially increase the funding allocated to institutions like MOSPI.
We would like the system to be comparable over time, over a period of time, also to be consistent with international comparisons. So we need to be very careful about bringing in more stakeholders, making it as broad-based as possible, and making the data as transparent and open and accessible to a common researcher, a student, an academic, and even journalists. So I think we need to ensure that any changes in the statistical system that is brought in should be basically spearheaded by the National Statistical Commission. It should be given enough teeth, it should be given enough statutory power, and it should be given autonomy and independence to undertake that exercise.
Experts agree that the statistical surveys of India need necessary updates. However, rather than a complete systemic overhaul, these updates need to be gradual and structured. Most importantly, the data collection and dissemination should be made transparent and engage both the government and other stakeholders.
Shares of Reliance soared over 8% after the company announced the date for the demerger before starting the downward spiral. The benchmark indices too have declined nearly 2% in 2 days as investors book profits following a sharp 15% rally from March lows. However, as Indian markets continue to sit on considerable gains, is it time to take the money off the table completely? Or should one buy the dip and hike allocations to equities? Nikita Vashisht explores the near-term market strategy in our next segment.
A sharp run in the markets from March lows and poor Q1 show by IT bellwether Infosys has tempted investors to take some profit off the table. The S&P BSE Sensex is below 66,400 levels, cooling off from the record peak level of 67,600. The Nifty 50 index too is testing 19,650, down from the near 20,000 mark it hit last week. So, are the markets likely to see a steeper correction? Or is this just a minor pullback from a sharp run? And should you buy this dip? According to Nagaraj Shetty of HDFC Securities, the Nifty index has immediate resistance at 19,850 levels, followed by 19,900 and 20,000 mark. However, the immediate support is seen at 19,650, followed by 19,422. That said, at a fundamental level, analysts feel the Indian markets are not overheated and suggest investors buy the dips.
The markets made their peak around mid-October 2021. Since then, on annualized basis, Nifty is up nearly 5%, the mid-caps nearly 8%, and the small caps are still in the red. This doesn't look like an overheated market from that point of view. Let's look at valuations. In mid-October 21, when the markets made their peak, Nifty was trading at around 23 times on 1 year forward basis. Right now it is at 19 times. This is close to 17% cheaper. The mid caps are 30% lower in terms of valuations, and the small caps are 33% cheaper in terms of valuations.
In fact, Agarwal of Alchemy Capital sees more room for an upside.
It must be noted that while Nifty is up around 8% in this calendar year, many major global markets in the world are about 20% plus in terms of growth. So we do see potential for markets to move up even higher from here on. And we are more positive on the mid and small cap space with higher earnings growth possibilities.
So, where should you invest then?
We are largely invested in domestic oriented sectors like financials, industrials, and autos, which has seen a significant improvement in their profit pools over last 1 year or so. Incrementally, we are evaluating some of the export-oriented sectors where things have been challenging and valuations have started to turn reasonable.
Overall, analysts feel that the Indian stock markets are expected to keep firing on all cylinders, backed by stable economy and the prospects of good corporate earnings growth. On Tuesday, July 25, the two-day monetary policy meeting of the Federal Reserve will begin in the US. Back home, Q1 results of Asian Paints, Bajaj Auto, Jubilant Foodworks, L&T and Tata Motors will be in focus.
He's making plans for an early retirement. Business Standard.
And it is not just the markets. Christopher Nolan's Oppenheimer 2 is giving some nail-biting moments. Just a 30-minute drive from Dalal Street, at PVR icon Phoenix Palladium IMAX, a ticket for the movie was sold at a record 2,450 rupees. But why so? How is IMAX different from others? Vasudha Mukherjee has the answer.
The most expensive ticket of Christopher Nolan's Oppenheimer was sold for 2,450 rupees at PVR Icon IMAX Theatre at Phoenix Palladium Mall in Mumbai. While IMAX tickets are more expensive than regular 2D cinemas, what is it that drives such high demand for the IMAX experience among moviegoers? IMAX is a motion picture film format. Developed in Canada in the 1970s, IMAX offers an immersive movie watching experience with its large screens. It consists of a system of high-resolution cameras, film formats, film projectors, and film theaters. Screens of IMAX theaters have a tall aspect ratio of 1.43:1 or 1.9:1. The screens can be 18 by 24 meters in size. The largest screen is in Leonberg, Germany, measuring 38.8 meter by 21 meter. Unlike traditional theaters, the IMAX film standard uses 70 mm film run through the projector horizontally. This delivers up to 40% more images due to its high-resolution 3D technology. IMAX theaters are also equipped with precision-tuned integrated sound systems so that audio is reproduced with clarity and positional accuracy. This also allows audiences to feel the sounds instead of just listening to them. An IMAX theater is also designed with steep seating to allow for an unobstructed view of the screen from any place. The theaters also run 2 projectors simultaneously to balance the warmth and sharpness of the film. AdLabs IMAX in Wadala, Mumbai was the first IMAX theater to open in India in 2001. Since then, IMAX has had a slow growth in India with only 23 theaters nationwide. The company plans to open 6 more theaters in India by the end of 2023 and open a total of 100 screens in the next 5 years. IMAX Corporation is also working to release more Indian films in its theaters. Dhoom 3 was the first Indian film to be released in 2013, and Pathan was the first movie to be filmed using an IMAX camera, released earlier this year. A ticket to an IMAX theater ranges between 500 to 1,200 rupees, depending on location, film, day, and timing. So far this year, Pathan and Adipurush were released by IMAX. The company, however, has plans to release a total of 10 to 12 Indian movies this year. The recovery for movie theaters has been gradual since the COVID-19 lockdowns. The release of Christopher Nolan's Oppenheimer has brought a renewed interest in high-quality immersive movie experiences in India.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Christopher Nolan recently revealed his favorite seat in cinema. For IMAX, his preferred seat is a little behind the center line, right up at the middle. Well, that's all for today. Catch the next episode of The Morning Show tomorrow. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.